welcome guys to our show we call the 3D Traders. This is where you get access to three different perspectives on how we see the market, how we trade the market, how we filter through the news. And you can tell we're very different the way we trade, the way we analyze information. And the thing is, you're getting access to three separate ideas. And so that's a lot of information. Most shows will just give you one perspective. We give you access to three. You have theta traders, vega traders, delta traders, big money, small money, consistent money. And that's what the show's about. We're here to give you as much value as we can. And then, wait, how much are they paying for this show? Is it 200? No? No crickets? So yeah, this show is free. I mean, and that's what we're here for, providing as much value as you guys as
Infinite return.
Infinite return. You know, you guys can make hundreds, thousands of dollars just with the information in this show. And so, you know, make sure that you guys take advice from professionals. But, you know, we're also here to give you guys some guidance on strategies. And so that's what we're here for, taking you guys to the next level up. So I wanted to talk about improvements. And so even though I've been trading since 2010, you know, I've seen all kinds of different markets. I've seen all kinds of twists, strategies. You tell me, I'm still trying to improve. And having my connection to Patrick and Everson's giving me some perspectives that I've never had before. So I wanted to start with Patrick. What kind of improvements are you looking for? Have you made in the past couple of weeks, even though you're a seasoned trader?
Well, Max, actually, for me, my most improved, what I've improved the most recently is just my adjustment strategies. And I think it's the same for you guys, is when we make a mistake, we try to analyze what we did wrong and try to improve on it so that in the future we can do it better. So in the past years, by improving on my adjustments, especially since I'm doing a lot of theta trading, when I make some trades that I would have lost money in the past, now I'm actually either break even or successful. So that makes me in the green a lot more than I used to in the past. And I think that's what people need to understand, is it's not about not making mistakes. We all make mistakes. It's just about analyzing what you did wrong and trying to learn how to fix it for next time, so that next time you can actually take advantage of that opportunity. So when USO literally crashed and burned, it was a costly time for me, okay? But the lessons that I learned from that, you couldn't teach me that in college, right? I learned through trial and error, and I'm gonna make tenfold what I lost with USO in future trades. So for me, losing, of course it sucks, but you have to put it behind you. Use what you learn to make more money in the future.
Absolutely. And so Everson, you're a seasoned trader as well. And so are you trying to improve yourself? You know, what have you learned in the past 2 weeks that's improved your trading style, or what are you trying to master to improve your trading style?
Yeah, so there is, and I like that. That was all good content right there, Patrick. You know, I'm the same way, but, you know, recently, and this is aside from stock markets, this is related to business. I'm trying to do a business acquisition on a food distribution service. One of the things that was told to me by the business owner was that you're constantly on your toes. You're constantly on your toes, and you're constantly making adjustments, because nothing is ever promised. Especially in a business atmosphere, nothing is ever promised, or profitability is never promised. Taking it back to the stock market, one of the most recent changes that I've done was to be more focused on selling out sooner than later, and not be greedy. Greed is one of those fundamentals in the stock market where, you know, they call it FOMO, fear of missing out. If you're that type of trader, like I can be sometimes, and I think we can all be at some point, where, you know, we talked about the last episode about the U1, where I hit 101%. I said, you know what, it's already gone up to 4,000%. So, you know, what's another 1,000 more, right? And so that greed took 40% of my profitability. Nonetheless, I still was profitable about 70 to 80%, whatever it was. But at the same time, I lost 40%. And it's also one of the things that I told one of my clients. I said, you know what? They were getting beat up because they had made such a huge gain initially. They just got into the stock market. recently and just got into options within the last 3 to 4 weeks. Made a huge gain for the amount of money that was initially invested, and took it hard on himself when the pullback happened. Uh, it's not about FOMO. It's not about taking that profitability. It's not about FOMO. It's not about taking profitability at the top, but it's about taking that profitability earlier on to capitalize on the smaller gains. Let's face it, in the markets, there is always a stock that you could be making money off of. You got hundreds of different stocks in just your local United States, not including the stocks that you could buy from Japan, stocks that you can buy from other countries and such. So there's a huge amount of opportunity that we can capitalize in. And if not just stocks, you could do commodities if that's something that you choose to do. But the realm of possibility, the realm of trading, the realm of even making money in businesses also is an endless amount of profitability. It's just where you choose to do your research at and how much of that research applies to you to be able to make that fortune, that good fortune.
So there you go. Patrick is still trying to improve himself, and he's learning from the past, and he's adding that to his repertoire. And Everson is trying to work with his greed and fear emotion. And so I'm sort of working with a similar project as Everson, since I'm going back to these nano trades. I call them nano trades, because you could be in a trade for 25 minutes or so. It's a different trailing stop technique than if you're doing, swing
Absolutely.
trades. So I have to recalibrate my trailing stop. So like Everson was mentioning, you don't want to sell at the top. It's hard to pinpoint the top. I like to sell between 15 to 20% short of the top. That way I'm out, took my profit, and I move on. So, those are the projects that we're working on. And the reason why we wanted to mention our improvements and what we're trying to work on is because as a new trader, you should constantly try to monitor yourself to improve. And the biggest lesson here is you cannot improve what you don't measure. So I wanted to go around the table here and sort of see what are you guys measuring, just to make sure, it could be your own measurements or it could be measurements for the clients that you have, to make sure that they're constantly improving and you can sort of monitor the temperature. Are they getting better, getting worse? So Everson, I want to talk with you. What are you measuring to make sure that there's a consistent growth?
Right. So I do a measurement with my clients as well as myself. I like to do a monthly measurement on success, or just, sometimes it's not a successful month. It would be a reevaluation. What did we do right? What did we do wrong? Kind of like with, us guys on this show. We do an evaluation after every show, right? Because it goes back to the improvement part.
Wait a minute. We've already told people about the pre-show. Don't tell them about the post-show, man.
Nice. It's like we talked about improvement, right? That measure of improvement is the measure of our success. So if we are lackadaisic in our approach, if we just expect to be able to collect premium and not really move, it's going to show. Those signs are going to show eventually in our success later on in life. For me, I like to do a monthly assessment, but I've been getting into weekly assessments. I think one of the big takeaways, I tell my clients this all the time: you need to journal. You need to journal, and you need to stay clear to the thesis. And journaling, especially when you go back and you read back on what you had written, it helps you to realign yourself to be able to see how your measured success has grown over the years.
Yeah. And so, Patrick, how do you measure, or what kind of things are you measuring to make sure that you're consistently growing, or are you measuring anything? What's your tactic here?
Well, actually, you guys know that that's actually one of my weaknesses, is that since I'm self-taught, everything I've done so far in my 12 years of investing has mostly been trial and error and learning from my mistakes and stuff like that. But that's the issue, is that the downside to that is it leads often to some mistakes that can be costly, as opposed to if you're more organized, like you guys are talking about, like really measuring your growth and everything, you can systematize it where it's a little bit more predictable. So I'm still working on that. That's not my area of expertise. Like I just go back to my what I was talking about a little earlier, how like when I make a mistake, I try to adjust in the future and not do the same mistake again. But I'm not really good at tracking and journaling, like stuff like that. It's more of a mental game, and I need to improve on that. I have to admit.
But there's also that difference between art and science. So Patrick would lean more towards the art side of a skill, and to me, it's
I'm
more
very
scientific.
artistic.
Yeah, I kind of is. I run this really tight regiment, and in fact, I'm very strict. You can ask Patrick and Everson. I'm very strict at the types of stocks that I look at. Sometimes, it's this dictatorship in my world here. But what I measure for my growth is, so what Everson's growing into is monitoring weekly numbers. Am I hitting my profit zones? So in my journal, I have all these specific profit zones that I need to hit for specific tactics. Credit spreads, back spreads, theta trading, you name it. I need to hit a specific number, and if I don't hit that number, hey, what did I do wrong? So that's what I'm monitoring. Now here comes my little story. I'm going to take you guys back for a specific reason to 1805, and this is a British Navy naval battle. Napoleon was the leader of the French, and this is where the British was fighting the French and the Spanish fleet. The French and the Spanish fleet together had around 33 ships. The British only had 27. So what Villeneuve, who was the admiral for the French Navy, what he did is he said, well, let's just go on the outside and form this line that's very tight and into formation, and then we will just be able to protect ourselves while we still, diminish the opponent. But what Nelson, who was the admiral for the British Navy, what he did is he saw that the French and Spanish fleet was creating order, a nice formation, a nice line, and he knew that he was outnumbered by about 6 ships. So what he did is he actually created chaos. So he sent his ship to go between the spacing of this line and attacked on both sides all the ships that created weaknesses. So now they were fighting 2 ships for every 1 ship, and so that battle was quickly won for the British. And then he went on to take on the other ships. And so what happened is the British lost 0 ships, and the French and Spanish together lost 22 ships. The reason why I talked about this story is the British knew they couldn't fight in an orderly formation. So what they did is they created chaos. And that's going to lead me into the market. So you can always find chaos in order, and you can always find order in chaos. You can either zoom in or zoom out or make different strategies. You can't manipulate the market. You can't tell it, hey, I want you to stop doing this kangaroo market that Patrick's talking about. I want you to flatline. You can't really do that. But when you zoom in, zoom out, and there's all kinds of strategy to do that. So I wanted to start with Patrick. Are there any things that you do or strategies that you use when the market's creating an environment that's not good for your natural trading behavior? Do you just sit on the sidelines, or you do something else?
No, I think that the first thing you need to do is find the market that works for your strategy. Because my mentor said before that it's never a good time to both buy and sell at the same time. Because like either you're at the peak of the cycle or you're at the bottom. So, it depends also. People talk about diversifying. Well, right now this show is mostly about the stock market, right? But you can diversify into real estate. You can diversify into financial instruments. You don't have to just buy stocks. So when stocks don't match your strategy, you can invest in something else. I started my investment career with mortgage notes. After the recession in 2008, the banks were selling them at huge discounts. So I could have bought like almost any of them, and made huge profits with it. But years later, when the market recovered, that strategy wasn't necessarily as profitable anymore because the supply really became much tighter. Well, what did I do? I pivoted into investing more in the stock market and real estate. So you always have to, the first thing I would say to that answer is look for the part of the investment world that matches your strategy. Now, if you really can't find something, then you'll have to maybe change your strategy.
So there you go. Think outside the box. Look for different kinds of investments where the timing is a better match. And
There's
so let's
different
go.
cycles for each investment. They're not always at the same time.
Right.
Absolutely. And so let's go with Everson. So what are your techniques when the market's not resonating with your trading model?
So I wanted to touch base a little bit while listening to Patrick. He lined me up on a topic that was brought to my attention earlier on in the week. It's a client, or it's not a client. A client brought this to my attention. There's a boy committed suicide off of a $700,000 loss in the Robinhood account. I don't know the specifics to it. I like to think that it was a glitch in the system. I have mixed reviews about it being a glitch and getting into options, selling calls or buying calls and this and that. But the reason why I mentioned this is because do what you know and know what you do. But if you don't know, then ask somebody. It's important to have a coach. NFL players will hire coaches on the side, in addition to the coaches that they have within their team. They do personal coaches. Successful actors and actresses will hire personal coaches for meal prep plans. You even got the gamers, big gamers. They have food coaches. They have personal coaches.
Wow.
People hire coaches for a reason. And the big thinkers and the big money makers will hire a coach. I'm not just saying this just to promote the brand and promote us, but it's really important that you know what you do and do what you know to end results like this, right? I feel sorry for the family. I'm not just trying to make this an opportunity for me to just sneak in and get a cheap shot. I feel for the family. I feel for the life that was lost. But at the same time, if there was a little more education placed into it and there was a little more thought process placed into it with the right kind of mentors in your life, this would not have happened because it shouldn't have happened. But moving on to chaos without order. In my life, when I see that the markets isn't working in the ways that I want it to, and I've been caught many times in this, sometimes it's good to just do a sell-off. Patrick and I were doing similar trades where we're selling off a lot of the stocks because we don't see value in them driving for a long run, despite what the dividend says. There's just too much speculation going on. So I'm staying in cash. Max doesn't like to stay in cash. I like to stay in cash. I think that's something that Patrick is doing as well. So I'll stay in cash, but at the same time, I'll seek opportunity in short games. So I've made adjustments, and this is the thing about the stock market. You will constantly have to make adjustments. 2000 and 2020 is two different realms. 2010 to 2020 is totally different realms. We can look at data research, based on history, but the way money is manipulated now, we never had cryptocurrency back then. We never had what China is doing with their system with the QR codes. We've never had a type of trading currency like we have in China. So the game has changed, and the dynamic of that, if you look at our currency, we still have that manipulation with the dollar because you can get counterfeit money, but in China you can't get right. But in China you can't get a counterfeit QR. All of that stuff is monitored within the system. So I think moving forward, even looking at the manipulation in the markets, it changes things. So we constantly have to be on our toes. Constantly have to be seeking the latest technologies and seeking the latest algorithm changes that happens in and around the stocks that we're looking at. So
It's
Just
a
be
race for information, and so
right.
that's why, like Everson was talking about, getting that coaching or the information. It's who has the cutting edge information, will succeed the most at that time. And so I wanted to move on real quick to there's a quote that's from football, Patriot organization, and it says, if you wait until halftime to make adjustments, you're late. Um, so I wanted to ask you guys, so what are you guys doing at halftime or before halftime when you're in a position to make adjustments? I want to start with you, Everson.
At halftime. Uh,
Before
so
halftime, because
before
at
halftime.
halftime you probably lost money or whatever if something's
Uh,
going against you.
well, I wouldn't know. I would know this more than anybody. I'm a Green Bay Packer fan, and about 2 years back, they were making adjustments at the half. After the half, that's when they would turn up the juice. So that's too late. They should have been, ahead. And they made the adjustment, and now we win in the beginning half, and we just kind of coasted at the end. So, with that being said, as far as what I do, I sort of I've started a strategy now. It's a new strategy to be able to hit it and 3 points. I'm focusing on a Monday, Wednesday, Friday strategy. I may take days off on the Tuesday, Thursday, and just observe the market. Reason being, I'm seeking confirmation. So usually what you would do is you would wait 1 or 2 days for a confirmation. If I take Tuesday and Thursday off, I get the ability to be able to coast it. So this is a strategy that's new to me. I've never done it before, but I'm willing to test it out to see what it presents itself. Um, stepping back,
And so that would
stepping
be an
back,
adjustment to the current situation in the
right,
market, right?
right.
Okay.
Stepping back to observe
And
things.
and so Patrick, what kind of adjustments are you making before halftime where it might be too late?
Well, Max, that's a really good question, but it's a very tough question because it really depends on which type of trade you're working on.
Right,
Especially right now, since right now I'm more in the Theta gang, it's more about preemptively looking at where the market's going so that your position isn't threatened and adjusting accordingly. So it's much, much, much slower pace than when you're doing momentum trades because right now, especially on the instrument that I'm trading on, it's not moving very quickly. So right now, my life is very simple. I mean, I go to bed, I don't
Nothing wrong
worry
with
too
that.
much. Oh yeah, nothing wrong with that. You know how that premium life is. So it's very different from when you're doing momentum trades. So I don't feel as qualified to answer that question because right now, like the type of trade I'm doing doesn't require that much attention all
Uh,
day.
my life's too easy. I don't have to deal with those problems. And then the types of adjustments that I do, and a big adjustment that I'm doing right now, which is sort of the theme of this episode, is chaos into order, order into chaos. So I've been doing a lot of delta trading just because of how the market's been bouncing around, like Patrick's been talking about, the kangaroo market.
kangaroo. Yeah.
And so it wasn't really working on the delta level. So what I did is I zoomed into my charts all the way down to 5 minute charts because the market was too flat overall on the day chart. I needed more chaos for a delta trading. You want movements when you're delta trading. So I zoomed in into the 5 minute chart, and then you can actually see some big mountains and valleys. And so that's where I'm making that adjustment. I'm turning that flat order into chaos by zooming in. So that's a technique you guys can use. That's it for today. This was an amazing show. Again, I
Amazing.
was accompanied with Patrick. Before becoming a market assassin, Patrick was a renowned assassin in a video game. And then, again, I was joined with Everson here, who in middle school he actually took over his business class because he knew more than his professor. So, hey, thanks so much for your enthusiasm. We love the questions that you guys are sending us. Click like, subscribe. If you guys are looking for mentorship, click on the links below for access to Everson and myself. And then you also have Patrick, who's going to deliver some products in a couple of weeks. So we love you guys. We'll see you next time. Make it a great trade or not. The choice is yours.
Take care.